And Mr. Oigara, taking us to the next area of focus really is touching on, you've brought up a very important aspect that the financial sector remains resilient, irrespective of the very turbulent last 2 years we've had. And I'd like to talk to us about, there's an upcoming major political event. This is, of course, the elections. And it has had different trajectories in an economy of our nature, which is very investor-driven, FDI-driven. What do you see in your crystal ball?
So for me, I always get excited about these questions because we've looked at elections, not just in Kenya, but across the region. We just concluded our elections in Burundi, Rwanda completed elections, Tanzania elections, Uganda elections, and Kenya is coming next. And we will always be in these cycles. But the financial sector tends to be in the nexus of connecting economic activity and empowering the general populations to build growth. It's always going to be like that in any economy. So we see more spending, more infrastructure. You can see it even today, more activities coming through, more resources. So the only thing we worry about financial sector on an election year is about the cash movements, the transactions, knowing your customers, and there's always threats about financial flows. That's the biggest worry the financial sector worries about. But in terms of economic activity, financial sector remain resilient over an election period because you see significant projects being completed, you see more spending coming out. The election itself is an expensive process, so you see more resources being deployed. Some of the projects which are not completed are being put into completion. So I'm actually positive that the elections net is neutral to the financial sector today. We'll continue to see growth, and our services are very digitally provided. There's an upside for big infrastructure which will continue to go. So I'm confident that even as we go to the big event next year, the beneficiaries will be the sector, correct?
Yeah.
Our customers will get much more opportunity to grow. And many times it tends to build growth. This is on our local side. And I agree with you when you raise about the global challenge. So financial flows, the DFIs, the global investors, our currency will face challenges because people get a bit nervous in an election. And I think that's an area that I see. I want to salute the work being done by Dr. Patrick Njoroge, the governor of the central bank. Because a lot of engagement happening with the private sector, the Kenya Private Sector Alliance, through the central bank mechanism, the banking sector collectively. I think that model needs to give the confidence beyond the curve. And if that happens, you should then be able to see flows remaining resilient. Will it happen? I think more work has to be done to engage in that conversation.
All right. And one of the other interesting developments we did see that the president announced was the restrictions for lenders when it comes to $1 million shillings and below, where this requirement where banks you had to declare what the money intents are for. How do you see this playing out now that the lead has been lifted?
So Abi, I would say that we are still engaging in conversations today with the central bank on. So the regulations remains the same, and that's what we've engaged a lot with the central bank. And it's an issue that Kenya has remained a strong signatory with many global institutions. But the question has always been that the 1 million shillings or $10,000 remains the same. My view is, as we engage the central bank to find the mechanisms, it's not a lifting. It's making sure that customers, banks understand their customers, or we as KCB understand who our customer is. I'll give you a good example. If, for instance, I run a local retail store or a supermarket, and I have transactions coming every day, coming in and going out, then do I understand? Usually that customer will be more than 1 million shillings a day. Correct?
Yeah.
So that customer today, it's not to declare, it's making sure that the bank has done the due diligence, they have known who the customer is, they can profile them. We do have customers today whose transaction every day, like an airline. If you go to Kenya Airways today, you'll find that they have collected coins more than 1 million shillings. So it's that model we need to find a way to accommodate. And as banks, we haven't been able to finalize that engagement. It's ongoing right now as we speak, but it has run well in the last few years. I know there's been a lot of concerns from customers. For us, especially as a bank, we've got a lot of concerns. And what we've done is to work with the regulator, and we will still have more conversations going forward. But I would say that in terms of the regulations, generally, these regulations will make it's same. It's not just a Kenya regulation, it's a Uganda regulations. We see it in Rwanda, we see it in Burundi, Tanzania. it is actually a more global regulations we see. And I think that's what we need to push for, because we are a country that is interconnected globally to other financial markets. Remember, we purpose to become the leading financial center.
Yeah.
Yeah. So you compare us to London, Johannesburg, New York, and the Middle East in Dubai, or Singapore.
Yeah.
That's where we should be looking for ourselves in terms of the model. And it doesn't affect all customers, to be honest. It affects customers who are largely enterprise or SMEs.
All right. And in closing, Mr. Oigara, I'd like you to talk to us about, we've seen under your leadership, you've been able to not only increase the value per share for the shareholders, we've also seen a charm offensive across the region. Talk to us about the pockets of growth that you can see when you scan the region. We are seeing a lot of interest in the Democratic Republic of Congo.
Correct.
We are seeing a lot of interest in Ethiopia.
Correct.
How is the bank's leadership aligning itself to seize these opportunities?
You know, it's a very good question you asked me. 10 years ago, the size of our bank was 1/4 of what it is today. I mean, that's dramatic when you look at the size. Rarely do you find a quadrupling of an institution in a period of 10 years. So when you look at growth as an ambition itself, Africa or our market in Kenya, there's huge opportunity. Our economy is expanding over time. Our populations are growing. We have full transition of children from primary school to high school to university and technical schools. There's a lot of value in there. We're getting more knowledge. We have more investors in here. So this is the right place to be. I wouldn't imagine of another pocket of growth in the world today and in the continent than this cluster of East Africa. So we're in the right place. We have neighboring countries which are looking for our products and services, and I stand strongly with all our brothers and sisters in Ethiopia. It's a difficult moment we see today, but I'm confident that Ethiopia is more resilient to overcome the challenges we see. So in the next few years or so, I remain still optimistic that the opportunities for Ethiopia remain long-term. And we have to take, I say that longevity in a way in enterprise is the way to beat the short-term hurdles. We must take a 5-year horizon, and you know our markets, you know the region. So I would say that today, I see that opportunity for us to build our business growth. The DRC is an area that I would say, not just DRC, but for us specifically, because that's an area we are not in, we are looking very keenly on that market with opportunities. But this is, when I was for instance, in Uganda, in Rwanda, in Goma, you see a lot of opportunity for Kenyan business to take, manufactured goods, services, education, anything, agricultural products. We have a lot of opportunity, construction. Many products I find where I go are products manufactured in Kenya or transiting from Kenya. And what I will say to you is that these pockets, so one is the region, we've been positioning, building our teams from strength to strength. So a good example, our teams in Rwanda are very much today ready to build businesses and grow and run a business in Congo, for instance. Yeah. So we've been prepared ready. Here in Kenya, we've been building that as well. And will I say other areas to grow? Let's not forget that Kenya remains a fundamental area to build our business today. We intend that, so $1 trillion shillings, our balance sheet today is 1.12 trillion, correct? What is our short-term ambition is to grow that balance sheet by 50% in the next 3 to 4 years. So we're still bullish. But Kenya will still remain a core market where we invest strongly, build our team, and KCB has been very well accredited in some areas. So as the largest bank in this market today, by the Euro money, for instance, or on areas like climate financing, where banks are being focused about sustaining our business in the midst of climate change problems. And we are looking forward. We were accredited by the Green Climate Fund. Today, we are assessing all our loan facilities with the environmental social governance principles to ensure that we are aligned to the global challenge of climate change.
All right.
So I would say that in the next few months as we go, because we are going to a season which has been difficult, and we didn't speak today about COVID, because, even in this conversation, COVID remains a challenge.
Correct.
Yeah? And I get a bit nervous when I see the re-emergence of challenges of the virus in Europe in the last few months. And our vaccination levels, and I must salute the work being done by governments in our markets. So we will see that the opportunity for us to continue to grow our momentum, even as we go into the end of the year, into the festive season for this year, and into next year, We have students sitting the exams early next year for the Form 4s. Actually, next year we have 2 exams in the high schools. And we are confident as an organization that our growth momentum will remain maintained, and we will deliver to support all our customers, especially the small and medium enterprises, to deliver on their objectives and to build their journey for growth into the short term.
Fantastic. Well, your parting shot really, Mr. Oigara, as we head into the festive season, what's your message really to investors who have had a dividend drought, especially at the stock market, and what do you see come 2022?
So I would quite thank our customers who have been very solid, and all our teams at KCB Group, and more particularly, if I talk about our investors as well. The KCB board declared a dividend for 1 shilling per share, which will be paid on or about 4th of January for those who are in the register in 8th or 10th of December. And this is just a demonstration that we are very much confident that we are going back into the regime of dividend returns to shareholders that we didn't have in the last year because of a crisis, and obviously demonstrate that we've overcome from the great challenges of our businesses. So I see that the future looks strong as we go into festive seasons, is to stand behind our customers, our shareholders, our engagement with our teams to make sure we can deliver the big ambition of lifting not just our business, but also strengthening our position as a key market area for investors. And for those who are joining globally, because we've seen a number of investors globally being nervous in our markets, this is the moment to take the opportunities. The momentum for growth now, you will find the market growing as you join in, and I wish you all the very best as you look at your next investments. Thank you.
Well, thank you so much, Mr. Joshua Oigara, for that very in-depth interview with us on the Trading Bell. Well, you've heard it from the man steering the largest privately owned bank in Kenya, that is Kenya Commercial Bank. And he's quite optimistic that the future looks great for the banking industry. And that's why we want to wrap it up for this week's edition of the Trading Bell. We now leave you with the day's markets.
Trading Bell, brought to you by SBM